Hello, everyone. This is Simon with AvaTrade. All right, I still see people coming in, so we're going to start. So, again, happy Wednesday, everyone. I'm very happy that I see you all again, and I see some new faces as well. My name is Simon, and we're starting our webinar provided by AvaTrade, and the title is Inside Circle Interactive Trading Conversations. I see some regular people, I see some new people, so I'll introduce myself. This is me, Simon Friedman. I'm a senior account manager with AvaTrade. I've been trading for almost 24 years. June of 2000, that's when I was introduced to Wall Street. I was a prop trader for about 11 years on Wall Street. And after that, I moved away from the prop trading. And of course, until today, I continue trading. It's my passion, I think the biggest. And I love the markets. I follow, I live it. And that's what I do. And I'm very happy to have a great opportunity to assist our customers at AvaTrade. The agenda of the webinar is very simple. We ask questions, we discuss, we try to analyze things. And the format is the following. You ask the question by typing, as you was so nice to help me here with the technical things. You just type the same window where you confirmed that you can hear and see the presentation. Just type your question. I know the regular people know the drill. For new people, it's very simple. You want to know about certain asset, gold, oil, Apple, whatever the group of assets there are, could be stock, commodity, currency pair, or anything that we trade on AvaTrade. We'll discuss it. If I know any fundamentals, which I follow, not the whole market, there's thousands of instruments, but the basic and the common instruments I follow, as I do other webinars as well. So I prepare some market reviews. Also, I do daily reviews for my team. And if I do know any fundamentals, I'll be happy to share them with you. It's all public knowledge, of course, no secret information. Risk warning, you can find the full document at avatrade.com. And of course, what we do here is purely educational. We do not suggest any trades. Social media, you have Telegram, X, or used to be Twitter, YouTube, my favorite, as I always say. We have tons of information there, tutorials, educational material. We have webinars that are being edited all the time. So if you miss the webinar, don't stress, don't sweat. Just go to YouTube and browse through the videos that we have. You find the webinar you'd like to watch. And if you are watching this on YouTube, please use the opportunity to subscribe if you haven't yet. Click the likes. You know, I have a lot of views, but not that many likes. So maybe I don't do a good job. And also, I would like to hear the feedback, criticism, positive things, whatever it is. I'm very open, and I like to improve things all the time. So please, if you are watching this on YouTube, feel free to write your comments, click the likes, share if you think it's valuable. And let's move on. Okay. Open the trading terminal. We're ready for the questions. Eric is number one. He already asked. Now, guys, I really want to stress this out. Last time I had to close the webinar. There were a few general questions from the audience, and not really specific questions. So I had to close it, I think 10, 15 minutes into the webinar, I just closed it. So it's a shame, it's a waste of time. So please take it serious. Feel free, use this opportunity to ask specific questions. People that are regular, I hope it works for you. People that are new, give yourself a chance, ask the question, judge the answer, and see if it works for you. And what else? We have up to an hour. So I really hope that we have tons of questions to cover the hour. Otherwise, it's just not useful. And also, if you feel shy or any other feelings that prevents you from asking questions, just think of it as you are sharing, because a lot of people will be watching it on YouTube and they have no luxury or ability to ask questions. They just watch recording. So think of them and think that you have a great opportunity to be a channel for them by asking the questions and preparing answers for those people that are not able to ask questions. Okay, so Eric is asking, the U.S. indices performed badly in April. Will they recover soon? Can we look at them? Absolutely. U.S. indices they closed the first quarter very nicely, and then starting April, it was a pretty bad month for indices. We're going to take a look. We'll start with the most diverse one, S&Ps. As you could see, April erased the March gains. Will they recover? It's I don't know. They say $1 million question. I would say $1 trillion question. They could recover. They could also sell. And actually, I read something. I like to read things, and I want to run across the article that says I can't say what was the source, but one of the financial institutions, based on the analysis going back to 1950, they say that if April now that I'm thinking of it, it's kind of funny. They say if April was down, so since 1950, 50% of those years, the market went down because there was also a question. There's a saying among traders, I remember it for many years, sell in May and go away. So it's a big question. You probably saw the question through the articles all over the place. Will this year sell in May and go away will work? It could. First of all, in about 47 minutes, we have the Fed's decision on interest rate. Kind of decided already there won't be any decrease, something that was expected actually in March. That's why the market ran into March back to monthly. The March was thing, and then the April was a sell-off, and disappointment came in. Also, there were some other reasons. Geopolitical things got intense, the Middle East, other things. Russia-Ukraine war, or Ukraine-Russia war, I don't know how to group it, but I feel bad for Ukraine, of course. And let's see what the Fed say. As I said, it's already kind of priced in. There's not going to be decrease. Some analysts even say, as we got to the point of stagflation, if I'm pronouncing it right, that's where the economy is slowing down a little bit since the last number of GDP, and inflation is not giving up. So it's a dangerous territory, and they said the stocks could be experiencing turmoil. So we're going to hear from the Feds what they're going to do with the balance sheet. They accumulated a lot of assets through the quantitative easing. Now we're in the face of quantitative tightening, and they are releasing those assets, lots of billions each month. So we want to see what they're planning on doing going forward. And of course, press conference where Jerome Powell will be drilled by all the Wall Street people. And usually around that time, we'll see volatility in the market. So Eric, to your question, will it recover soon? Daily chart says that probably not, because here on the daily chart, we just crossed another moving average. We're still about to 200. So we, after making all-time high exactly on March 31st, we've been turning back bearish, as you could see. Lower highs and lower lows are there, right? So, but again, they could come up with, hypothetically, if they say, "Wow, we're cutting rates, everything is amazing, inflation is just an illusion, it's not there," I'm exaggerating, right? So we could run and retest the highs. Otherwise, if you take all the fundamentals and geopolitical things and season, like I said, April, May things that traders look into possibly trade. And also last year, in a simple, logical way, we had a huge run since October of 2023, right? Some assets made 70, 80, 100% run. Some were not doing so great. Tesla is one of them. Apple is one of them. We'll find out. It's hard to make predictions. Again, like I said, it could happen. But based on what's happening now, we are having a pressure, and as you could see here, it's very important to see. You see the volume here. On this is the weekly volume. As selling intensified, the volume significantly increases. So a strong sell-off on a strong volume, it means something. There's a sell-off going on. But again, we can't make that prediction. I learned in my trading career, when I had a strong conviction, I got severely punished for that. So you got to be flexible. You have to be ready for any outcome. Okay, Emmanuel is asking, I'm new, what platform is it? This is the MT4 platform. It's a generic platform that a lot of brokers are using. Also, our major platform is the in-house web trader that most of the people are using, especially people that are in the beginner stage. It's very easy. It's explains to you how much money you need to use and other things. So it's highly recommended to use web trader. We have the mobile-based version of our in-house application. But this specific one is MetaTrader 4. Okay, Abigail Hanfield. Do you think US 500 will fill in the gap from December 12, 2023? Great question. I like gap questions. First of all, guys, thank you. Please keep going. Keep asking. You can pile up the questions. I'll be happy to finish exactly 1 hour from the beginning. That's my goal. Okay. December 12, 2023. Are you talking about this one? First of all, it's anything is possible, but I don't know what caused this gap here. I told you the truth. I'm not sure. On the 8th, it was 46.13, and then it opened 46.60.75. I think it's far away. Even if it was to close, if we were to close that gap, I told you the truth. I don't think it's relevant now. We have like so much to do before we get there. Let's see on the weekly if this tells us anything. I don't see any gaps on the weekly chart here, but on the daily, it did. Abigail, if you don't mind, I'd like to hear from you because I'm very curious. Why are you so curious about this specific gap? Were you in the trade back then? Do you know anything about it? Please help me out here because first of all, I don't know why this gap happened, but that's far away. That's before there. Okay, let's say hypothetically, if we were to close that gap, we didn't close it to begin with. We just went higher, never revisited. Since then, is this baseline here, 45.60 area. So you can see here, I even have a line there from back then. We just kept on going higher, right, until we hit the March 31st. So here, as I said, we're making a lower highs and lower lows, significant lower lows. And before anything else, if we are to move lower, we would need to definitely test this area. So you could see here There was a lot of actions here. 1, 2, 3 instances of actions here, and then when the sell-off, the initial sell-off that stopped on the 19th of April, it stopped at 49.63.5. So this 49.63 level has to be retested before anything else. All right, and I guess as we'll be getting closer, then if we do break that probably, logically speaking, this level will be retested, and then probably 47.44 level will be retested around here. See what the spikes couldn't go any lower. It means the buyers were sitting there, right? One, that's like fighting here, then another support, and then we went higher, right? Triple bottom, higher, triple bottom, higher. So here, we're back to this level. So if we are continuing lower, I would really watch this 49.63. That's on the technical part, right? Fundamentally, we could hear some terrible news or some amazing news, so we could either move up or down. Okay, Abigail, I got your answer. Thank you. Abigail saying, I'm just interested in investing in US in the future. Okay. Just in general, if you don't want to trade, you want to invest. Investing, that means something for long term. And if you take historically through the history, if you take all the data through many, many years or decades, S&P is making an average between 8 to 10% a year in average. Some years are crazy, like we had last year. In the beginning of this year as well. Some are not so great, but in average, it's kind of a common thing. People that are not traders, they're investors. They just invest in S&P index and just hold it and add to it and so on. This is one of the things that people do. So the reason I'm saying it, that you said that you're interested in investing. So investing and trading, it could be different things. Okay. Thank you for your questions, guys. I don't see any new questions. So please, before I'm going to start begging again for questions, let's make a miracle. Let's have a pile of questions. So we just go through them. All right. Anybody who already asked questions, you're allowed to ask multiple questions. Like I said, you're not just doing it for yourself. It's people that will be watching it on YouTube. I'll be very thankful to you for doing it. All right. Okay, guys, can we get some questions? Okay, Emmanuel is asking the question. It's not really a topic of the day, but I'll be happy to answer as I'm still waiting for the real questions. Emmanuel is asking, how long would it take for me as a beginner to learn and understand trading on AvaTrade to use MT4? If you're beginning, okay, I got to answer. Eric, keep them going. Anybody, pile up the question while I'm answering this question for Emmanuel. I will be very happy, and audience will be happy as well. So, Emmanuel, if you're a beginner, I would recommend to you to use our web trader. There are tutorials. You can go on YouTube, just type AvaTrade, and then you can find tutorials there on web trader. It's a great thing. My friend Danny, he's doing every week. He's doing 2 webinars showing the web trader and also answering specific technical questions. So you can sign up for that webinar. You can find it on the website, or you can ask our support to help you with that. Nobody can tell you how long would it take you to learn and understand trading. I've been doing it for almost 24 years. Sometimes I feel lost in this market as well. So I've seen people never making money and trading for 3, 5, 10 years. I also seen people after 3 months, 6 months having consistent profits. So it depends on a lot of aspects. It depends on hard work, risk management, discipline, funds available, of course, and knowing what to do with those funds, how to manage them, how to manage the risk with funds. And of course, then you learn some fundamental analysis, you learn some technical analysis. Another colleague of mine, Troy Frey, he's doing 2 webinars a week as well. One is on technical analysis, one on fundamental. We have a lot of assets, a lot of sources they can learn from, but nobody can tell you how long. I mean, you can become a genius overnight and become a successful trader. It also happens, but it's up to you how much effort you put into it and how you go about it. But first of all, speaking from experience, you need to apply risk management from day one. In my case, and I share it with a lot of my customers, when I came to start trading in June of 2000, I lost about $50,000 in 3 months because I thought I was smart, and if everybody can do it, I can do it. But I didn't realize that people around me had great experience already. They've been trading already. I came in 2000. Some of them were trading since 98, 99. They also had much more funds into their trading and other aspects of it that I didn't know about. So I just jumped in. And in a way, I'm happy I did, because that was painful experience after 3 months, seeing that half of your savings is gone. And I was young back then, right? And then I asked one of the traders to really work with me, and we spent about a month analyzing my trading and fixing it. And slowly, I started understanding things. And the big thing for me, initially, I got very reactive, and he told me, "Don't worry, it's a cheap lesson." And I was so upset, I almost beat him up. I mean, not physically. But later I realized, because if I didn't take it as a lesson and moved on, I would be probably losing more. And at the end, I would start hating trading. But today I love it. Not an easy journey, but it's possible. You just have to apply all the ingredients so the salad will be tasteful. Okay. Eric, thank you for your question. Guys, please, let's do more questions, okay? Eric's asking, crude stocks high, reflection on oil today. Oil is not doing good today. Let's see. I was doing a market review for my team today, and I said that oil needs to go and retest this level here around 80.5, and take a look. We just went through it easily. First, you see, I was happy that I was right on my prediction, so we stopped and start really zigzagging here. But then I think when the inventories came, as you said, oil just went down. So let's see what China is doing. When I hear oil, immediately I want to see what China is doing. And China is not doing that great for the past 2 days. But a nice move on China above this previous resistance. And the last 2 days we've been a little bit in red. So it looks like demand is cooling. Market's going down. China is retracing a little bit from the recent highs. And you have supply is not really supporting it. The supply is high, as you said yourself. So we have a little bit of a double impact here. A little bit slowing down in demand, and supply is piling up. So, and you take geopolitical things. Everybody's excited. I don't know, but it's the right word to say. Everybody's hopeful that the Middle East crisis is getting close to some peaceful resolution. So that also cooled down the oil a little bit. So yeah, today oil is not a happy camper. Now, what's next? We're sitting right on 100 moving average here as we speak on daily chart. And first thing comes to mind, this double top here, or quadruple, spike, resistance. We are currently below this level, around $79 we are troubling here. So let's see if we manage to stay above it. There's a chance of bounce. If not, we could travel lower here. Want to see what this trend line doesn't mean anything. It's not from here. Okay. All right, Eric. So yeah, you're right. Definitely reflection. In any market, you have two sides: demand and supply. If demand is high and supply is short, it's ideal for the market. I'll just give you an example. Nobody asked about cocoa ever. Look at this move in cocoa, vertical from 4,000 to 11,700. And the past 2 weeks, we're selling. So this was a super short supply caused by the weather condition, drought, and everything else in West Africa. Ivory Coast, the biggest producer of cocoa. And demand was still good, but I didn't hear any positive things on the supply side, but business is starting to shut down. They couldn't afford this chocolate business because cocoa became so expensive. So as I was speaking at a few of my webinars, so it will come the point when demand starts shrinking. So I think this could be the thing, but it could be also that supply is improving. I didn't find any of that. Just give you an example. I'm not suggesting anything about cocoa, but I'll just give you the analogy, what's happening in oil. All this move was a fear of supply and happy about demand, right? And then things start cooling down on the market. Let's see, 5th of April. Let's see what S&Ps did back then. Starting of 1st of April, got intense of 4th. Since 4th of April, pretty much after an attempt to move higher, been selling. So the global economy is showing some weakness, fear of slowing of demand, pushing the oil lower. And now, as you said beautifully, the supply is showing surplus and oil is being pushed down. Okay, beautiful question. Thank you, Eric. Abigail, thank you. I was hoping somebody will ask about gold. So Abigail is asking, and I'm reading, do you think gold is reversing after weeks of being bullish, or do you think it is retracement with a possible inner trend? Abigail, beautiful question. Thank you very much. Gold has been super strong. And at the same time, you see every new highs were very short-lived. Right, you see this spike that was this lasted, I think, 5 minutes. This new high. I'm exaggerating, but very short-lived. And another attempt here we had on the 19th of April. Since then, we came to hold this 2333 level, and we're fighting. And then yesterday there was a sell-off. A sell-off happened when U.S. data came in, worse than expected. There's some wages data and housing. It wasn't market friendly, so to speak. It wasn't bad. It was just not market friendly. It was towards the Feds prolonging that with their decision of cuts. So that's why market reacted down. US dollar went up yesterday, as you could see. So, and something they call 10-year yields moved higher since that data. So gold is very sensitive to it. And the question is this retracement? I mean, we just officially, you could say that we kind of entered, at least for now, a little bearish thing. What's the significance of bearish? We just made, after making lower high, we made a lower low against the other one, right? We can just show it, the trend line, getting a little bit of a simple technical analysis. So you connect the tops. the lower high, the lower low, another lower high, another lower low. So it could be, we're still above the 50-day moving average. So we're not really in a strong bullish, in a strong bearish trend yet. But there's a chance that we might continue and retest the 50 moving average. That would bring us to somewhere close to this trend line connecting the previous lows. Or we can just bounce. And I think today we're going to see some volatility. As I said, in about 22 minutes, there's a decision and a statement, and then 30 minutes later, press conference. So we will see spikes in instruments like indices, gold, and US dollar for sure. And we'll see how gold reacts, right? Great question, Abigail. Thank you very much. Guys, thank you. You're saving the day, and you're helping the people that are going to be watching this in recording. We still have time. Anybody has any questions? I hope the answers were, or the discussions were sufficient and helpful. Anybody? Going once? Going twice? All right. Guys, I want to thank you. I hope you will watch the market reacting to it. Whether you participate or not, it's your business, it's your decision. And if you decide to participate, please be careful, manage your risks, have a plan, have an exit strategy. Okay, have a wonderful evening, and we'll be back next week. Again, if somebody is watching this on YouTube, please feel free to click the likes, share, write your feedback. Very important, very useful, and very appreciated. Okay, all the best, guys. Take care.